happy holidays. This is Trevor Nargis from Annex Wealth Management's investment team. And what we wanted to do this year is offer up some New Year's resolutions when it comes to your portfolio and how you think about your investments. The first one that we wanted to talk about is kind of in light of the fact that this year's been kind of rough, and maybe it's led to people diverging from their investment strategies, kind of diverging from their plan. One New Year's resolution we wanted to offer up is the idea of having an investment strategy and sticking to it. So that kind of jives with having a long-term perspective. You know, it's really easy to get caught up in the day-to-day of what takes place across the world of investing. You have a ton of financial media. There's always a bunch of headlines circling around. And as a result of this, many investors partake in some bad habits, things like overtrading, chasing performance by looking to buy just what's done well over the past few months, or trying to time the market, or maybe selling whenever they see the first sign of losses. One of the most helpful things individual investors can do is to let it ride and look to get out of their own way. So again, having that long-term perspective. A financial services research firm called Dablar, they've studied the timing of something like mutual fund flows over time and have found that the average investor actually has a tendency to underperform the market, giving their tendency to try and time it. So what does this lead us back to? Comes back to having that long-term perspective, taking a step back, not letting your emotions get the best of you, and really trusting that strategy that you put in place. Second resolution that we have to offer is the idea of diversification. Now, this year has been pretty tough for diversified portfolios, with stocks and bonds both taking pretty decent hits. It's one of the first times in almost 150 years that you've seen stocks and long-term bonds down more than 10%. But at the end of the day, diversification presents a ton of benefits to one's portfolio. You know, many people have heard the phrase, don't put all your eggs in one basket. This rings true now more than ever when it comes to portfolio constructions. Many firms anticipate higher volatility in 2023, and the goal of diversification is to help reduce that volatility. In theory, diversification aims to make the ride of investing smoother. You know, a portfolio that's well diversified from both a factor, sector, and asset class standpoint can help mitigate risk, smooth returns, and help investors achieve their long-term goals. On the other hand, a lack of diversification in one's portfolio could expose one to excess risk and the potential for diminished returns. While diversification may not lead to one experiencing the full upside of markets, so something like the S&P 500, you might not see all the upside when the market's moving higher. But a diversified portfolio tends to help soften the downside impact to one's portfolio. All in all, it helps to smooth that ride and helps you achieve your long-term goals.